Hello everyone, I think we're back. We had some technical issues. So we tried to do the stream in 2K quality and I do not think YouTube was having that at all. So we had to readjust the quality of the video to something that is more suitable for YouTube. So going to give everyone a couple minutes to get back in and then we'll pick up where we left off. Yeah, momentum trader. So you're saying it's only showing the last 30 seconds? All right. So when I'm finished up with the stream, I'll see what I can do about that. Kieran, you were enjoying the 2K on the 55 inch? Yeah, man, I do too. I'm not a big fan of the 1080 quality, but looks like YouTube was not having the 2K quality at all, but no worries. So give it a couple more minutes and we'll get right back into it. Big shout out to Lotus. Thank you very much for the support. Much appreciated. Keeps me motivated to keep doing this for you all. Thank you very much for the appreciation. You being you're on 720 now, but looks okay. All right, yeah, it should support 1080 HD quality. And for some reason, YouTube is not having the 2K quality. All right, so let's go ahead and get back into it. I think everything should be good. All right, sweet. Thanks for the feedback, Mahmood. Denisha, thank you. Momentum Trader, all good. All right, great. Papa Vlad, thanks, my man. Mark, back again. Sweet. All right, thank you all. And the patience is greatly appreciated. So let's go ahead and get back into it. So looking at Euro on the weekly chart, we have been calling this market lower after we rejected the volume imbalance in here, repricing to the high end beautifully and then rejecting that lower. Last week, I took our attention to this weekly inversion fair value gap in here. So because we closed below it the previous week, I was confident last week to expect this to be resistance, especially if the market is in a sell program. It will trade up to a old fair value gap and then use it as resistance. That's what an inversion fair value gap is. The way you qualify inversion fair value gaps is understanding draw and liquidity. So where's the market going? Why should it go there? And then every single ICT concept is effective. But it's not effective unless you understand the draw and liquidity, or in other words, where's the market going? So last week, I took our attention to these equal lows in here and this weekly fair value gap, this BISI inefficiency, and then we repriced into that beautifully. So moving forward, I am still looking for lower prices in euro as I am looking for higher prices in dollar. So with that, I will be looking for this rejection block in here, the lowest close. So we'll call that 1.07 big figure number. Through that, I do like the sell side. And then going into the September, maybe even October, I do like these relative equal lows in here as a downside target. So longer term, I am extremely bearish euro dollar as I am a bull on dollar. Further confirmation is we are seeing a three drives pattern, seeing how each time we took out the high, we took it out, pulled back into the range, took out the high, pulled back into the range, took out the high, pulled back into the range. So this is not a market that is decisively bullish, and this is why I have been confident calling this market lower. Dropping down into our daily chart. So nicely hitting all of our targets last week. Remember this purple rectangle is that inversion. Traded up into that, rejected that beautifully, running for the equal lows in here, and then into the bullish order block that was my last target last week. Hitting that order block beautifully, all targets nicely delivered too. So going into this week now, We do have two up close candles above us. I would want to see the market use that as resistance and reject it to attack the sell side here. So there is no real inefficiency in here that has my attention. So I am going to take my attention to the equal lows in here and then eventually this low. So I am still looking for lower prices on euro as long as we remain below this up close candle in here. If we get above this up close candle, then we have this weekly inversion fair value gap to contend with. And then if we do get above that, then I would reevaluate and reassess my stance on euro. But for right now, we are seeing lower prices. So 4-hour chart, same thing as we saw on dollar, all this back and forth, balanced price range. Would not want to see this violated, but it is reasonable to expect a retracement back into this range and then sell off from there. So that's what I'll be looking for moving forward into this week. So I'll go ahead and touch on pound real quick. Haven't looked at this in a while. Reason being is because it's just been in a sideways range, but it is leaving that range now beautifully. So looking at pound, we've traded higher into these last two up close candles, and then we've rejected that sharply. These last two down close candles in here was our bullish order block if we were bullish, but we weren't. We were bearish. So that would then become a mitigation block. So as we trade up into that, smart money traders are mitigating long orders and accumulating shorts, which is what's occurring there. And then we see the market smash lower into these equal lows in here. So dropping down into our daily chart. So my associate, Tommy, called out a beautiful trade on the British pound on a 4-hour chart, looking at a 4-hour fair value gap, running to these equal lows that we had our attention on. So it was easy to trust the draw on liquidity we had on pound. Why? Because we were bullish dollar. So all these things come into agreement to form a beautiful tapestry week in and week out. And that is what we are teaching you guys to read here. So looking at this here, this green rectangle is a weekly fair value gap. So I do like how we close below it, which is indicating weakness, smashing through these relative equal lows here beautifully. So what I will be expecting going into this week is we can use this weekly inversion fair value gap here as resistance, but I do not want to see us get above this high. So as long as we remain below this high, I am bearish on pound, and I will be looking for the sell side below here as a first target at the 1.248 level. Through that, I take my attention into the 1.23 and then the sell side below here at 1.230 big figure number. So that's what I'll be looking for on pound moving forward, assuming we get that acceleration higher on dollar index. So let's take our attention to indices. Beautiful. So looking at S&P, I took everyone's attention on a monthly chart to this fair value gap in here. Same thing on NASDAQ, monthly fair value gap, and then we had that delivered to beautifully. So now just simply looking at a monthly chart, how we trade here will be influential moving forward. Do we accelerate through it, use it as resistance, and then run lower? Or do we begin to find support in here? That's what I will be monitoring. Tipping my hand to you guys using the weekly daily chart, I still am looking for lower prices. However, we do have to keep in mind these higher time frames, but just understanding that we were looking for this monthly fair value gap to be delivered to, which is reasonable after 1, 2, 3, 4, 5 months of consecutive bullishness. We hit premium levels, and then it's reasonable to expect a retracement back into the range. So going into our weekly chart here, market has delivered to a deep premium. Let's go ahead and cover this a little bit deeper. So looking at this volume imbalance and here extending that through, look at the sensitivity here at the midpoint. So this market was not indicating a willingness to want to rally through midpoint or consequent encroachment. So the fact that we trade up into that, rejected this key level, traded to and through this fair value gap, qualifying it as inversion real time, rejecting that, we are seeing bearish order flow on the S&P on a weekly chart. So again, I think it was the week before this, I took our attention to how we closed below this fair value gap. So the fact that we closed below it is bearish, traded back up into it. What would we expect? Weakness, and for this to be inversion. Why? Because the draw on liquidity was here and here. So since those were my targets, premium arrays will act as resistance if I'm calling the market lower. So looking at this on a weekly chart, one other thing I do want to take our attention to is the mitigation block here. So why is this mitigation? Again, because it's an old order block, but now the state of delivery is bearish, or in other words, we're in a sell program. So because we're in a sell program, the market will use premium arrays as resistance. And looking at the opening price of this candle here is exactly the high of the week last week. So trading up to the high end of that mitigation block, I'm watching all these key levels and seeing how we trade there, and then seeing a huge rejection lower, indicating weakness. So yes, we did have an up close, but the fact that we traded higher, we're unable to sustain the rally and immediately rejecting is bearish for me moving forward. So my attention goes to this weekly fair value gap down here in discount. And just doing NASDAQ side by side, we have equal lows here on NASDAQ and the fair value gap. Trading up higher into the weekly breaker, rejecting that, bodies closing below it beautifully. And I will expect this discount fair value gap here to be traded to moving forward, also assuming we continue seeing a higher dollar. So daily chart for S&P, take off the weekly mitigation block, clean up the chart. So seeing bearish order flow, calling the SMT here, calling a quarterly shift here as this was occurring real time, seeing the SMT and then the displacement lower. Trading up into this fair value gap, I qualified this as a breakaway, seeing how I did not want to see this fill in, and the fact that it didn't indicated this market was extremely weak, and then seeing the order flow that followed that was clearly indicative of that. So looking at previous week, we did see a bit of a retracement into the range, which is logical. We have taken out significant sell side liquidity on a weekly chart, so a retracement is to be expected. Also considering we haven't had a run on stops on the daily chart for the past couple months, and NASDAQ did that. So looking at NASDAQ traded above this high. Why does it do that? Because traders that are short, what do the books tell them to do? It tells them to put the stop above the most recent swing high. So the algorithm or the market makers are going to attack that liquidity before resuming lower. So why did I trust this being a run on stops? Because SMT with the ES. So the fact that ES did not make this higher high is that Kraken correlation or smart money technique. So this indicates to me that the ES was under accumulation of shorts. Looking at this more closely, we have an inversion fair value gap here and also a bearish order block, extending that opening price through. I'm looking at how we trade at these key levels, and how we trade there when we do is influential to me at the time. So seeing how we traded up into it to the point and then rejecting it, smashing lower, is still confirming bearish order flow for me. And then the SMT here with the NASDAQ was just additional confirmation. So what I did like with this move lower on Thursday is look at how many discount arrays it repriced through. So here we have a fair value gap here, fair value gap in here, and a down close candle, which would be a bullish order block. Smashing through all these levels, showing no respect for it, is further confirmation that this market is extremely weak. So I will continue to look for lower prices in the stock market. And I told you guys I was accumulating short positions longer term up in here. So I'm still holding it. Order flow is still bearish. And then for the swing traders, I'll throw a little gem in here for you guys. How do you manage a swing trade properly? So you can use a 15-minute, an hourly chart as an entry to refine and manage risk, but you need to understand daily order flow to be a profitable swing trader. Because if you look at this price action on a 15, 5-minute, or even an hourly chart, it's easy to get scared out of a position. But as a swing trader, you must trust order flow on a daily chart and just allow that order flow to carry you to your objectives. So if longer term, I'm looking for the market to trade up into here, this retracement is not invalidating anything. So as long as that order flow remains bearish on a daily chart, I'm going to trust my longer term swing positions, and I will continue to hold them into the future. So as I said, order flow is still bearish in here. And then as long as we do not violate Thursday's high, I am still bearish on this market. And then we'll refine this as we go through the time frames. So just briefly here, touching on NASDAQ, clearing out the buy stops, rejecting it strongly, and now we have an up close candle, bearish order block. So I do want to see sensitivity inside this up close candle, and I prefer to not see us get through mean threshold, which is 50%. So I do not want to see us get above the 50% of this candle, and that will send us lower into the equal lows, sell side liquidity, as well as this gray box, which is the weekly fair value gap. So we are still looking for lower prices on stocks. You do not want to be a bull in this market, especially if it's on the other side of my trade, trust me. So dropping down into the hourly chart for S&P. Roshan, can you please make a video on how to do intermarket analysis? Here it is, brother. We do it every Sunday. Tune in. So looking at the hourly chart here for S&P, this is that high on Thursday that I told you guys would be significant. So I do not want to see this high violated. Why? Because it already retraced to a premium. So one of the things that I share with you guys is, let's look at this dealing range from high to low. So whenever the market is bearish or I'm looking for lower prices, I do not like to see the market stay in premium valuation for very long. Market makers do not like to keep the market in a premium if we are bearish. So as soon as we trade up into a premium and then we reject that, that is the strongest confirmation that this market is weak, as it was not able to sustain premium valuation, looking at this dealing range high to low. Also considering that this run higher cleared all the trailed stops here and here. So traders that do not know how to properly trail a stop on an hourly chart would just put it below the most recent swing low here or here, and they did get stopped out, which is, as smart money traders, we're looking at this as a simple retracement back up to a premium. And then that is also the daily bearish order block here, as we can see by that thick line, trading up to that level and smashing lower. So now that we have the context of the previous week, let's go ahead and look into this week. So just keep in mind this purple rectangle in here is a daily fair value gap. So if the state of delivery is bearish, I do not want to see us get above that. So I will be looking for the high of the week in ES to form within this fair value gap, qualifying this as an intermediate term high. I do not want to see us get above this high, and more specifically, I do want to see us reject inside of this hourly fair value gap. So how we trade there will be influential. If we trade into this fair value gap and we do not get a rejection or move strongly out of it, we could just remain in a consolidation, keeping in mind we are in August, so you do have to be prepared for whatever the market throws at you. I am still bearish just based off the higher time frame order flow. However, I will be looking for some high of the week to manifest within this hourly premium fair value gap. And more specifically, the daily fair value gap in here, I do not want to see us get above that on a closing basis on the daily chart. And then I would rather see us accelerate lower into the equal lows here and here. And then that would be a beautiful setup going into the beginning of the following week. So just briefly touching on NASDAQ here, same thing, trading higher, clearing out the buy stops, and then smashing lower. So same thing for NASDAQ, we have premium fair value gaps in here. So it would be logical to see a retracement as we open into this week, and then I would want to see us smash lower into the equal lows and into the higher time frame discount objectives here being the equal lows and that weekly fair value gap in there. So that's what I'm seeing for dollar, bonds, forex, and indices. So with that, I did have a couple questions on crude oil, I believe, and the ICT Reaper. So I will get to those now, and then if there are any questions in the chat, I will go ahead and take a look at those. Kieran, especially when it's on the other side of my trade. Well, yeah, man, just looking at my record, I wouldn't imagine people on the other side are doing too well. So Ashley Elkins, measuring the bearish order block on the daily chart of NQ, do you include the wicks? Let me see what you're talking about. So for the bearish order block here, there actually is no wicks on this candle. It's just a body. We opened and closed with no wick above it. So we opened and closed at the extremes. So like I said, there is no wick here. So I would look at the opening price and the mean threshold for sensitivity moving forward. AB, love this and look forward every week to it. Dylan, got to bounce. I'll watch the rest this evening. Thank you. AB, my man, I believe you wanted me to take a look at crude oil. So as you come back to the recording, you'll have that in there for you, my man. All right, so let me go ahead and get to a member. AB was asking about crude oil. So let me go and take a look at crude oil. Put on a clinic in crude oil last week. So let's go ahead and keep it pushing. So let's start on the weekly chart of crude oil. And then for those of you guys that saw the message in the Telegram group, I do have to start refining the questions to member questions because there are so many questions that I am not able to attend to all of them properly and to the standard that I hold to myself. So for those of you guys that do sign up and become members, you show me you want your question answered. So I will go ahead and attend to those with more detail than I would other questions. So with that, let's keep it moving forward. So looking at crude oil on a weekly chart, we have called this market higher. As you guys know, I am a bull on commodities for several factors. Not going to touch on all that now, but I am looking for higher prices. So we called this entire run here into the equal highs and the inefficiency beautifully. And then I told you guys we would retrace last week into this fair value gap. Why is that? Because we reached external range liquidity and then it's pulling back into internal range liquidity as we would expect. So looking at last week, it was interesting to note how we traded inside this void. So looking from this candle's opening to this candle, or this candle's close, excuse me, to this candle's opening, looking at the consequent encroachment of that, we repriced into that consequent encroachment beautifully and then snapped higher, indicating order flow is still bullish. Also, taking this off the chart now, let's clean this up. Looking at this weekly fair value gap in here, it was unable to even trade the consequent encroachment or midpoint, which is extremely bullish. So I did tell you guys last week that I am looking for lower prices short term, but I am still longer term bullish on this market. So we did trade into that, and then we saw the rejection of that beautifully, and I will expect higher prices on crude oil moving forward. So dropping down into the daily chart, I told you guys how we would reject this fair value gap in here and run for the equal lows here and here. Reason being, this market has just had a huge run higher. It's just been on a tear, trading up into the buy side. So it is reasonable to expect a run on stops. So we did see the market run into these stops. So since I told you guys I am still bullish and we're just trading into these stops to continue higher, that would be a beautiful turtle soup long to continue the rally. But also looking at the weekly daily fair value gap, we traded into that and then immediately found support. So going into this week, I will be looking for higher prices and I would prefer to see this low remain intact. If we do violate this low, we could see a deeper retracement. However, I am not favoring that. I would like to see this remain an intermediate term low. It already did the damage of running to the stop loss orders. So now I would want to see it reject and resume higher. So my first target would be this high, which is last week's high, and then we have the buy side here. So longer term crude oil, I am looking for us to reprice into the 90s. So how we trade at this buy side here when we get into the 93s, 94s will be interesting, but longer term, just showing my hand to you guys, I am looking for these equal highs. That puts crude oil into the 115, 117s, and that's what I am looking for longer term. Looking at this on a monthly chart, huge run higher, retracement back into the fair value gap and order block. So I covered this real time when I was calling this market higher the past few months, hitting that order block, nice reaction higher. So what does that make this candle here? A propulsion candle. So as long as we find support in there, I expect us to be off to the races to these equal highs in crude oil being buy side liquidity. And I do expect us to see the 120s within this year, which will put significant pressure on all commodities moving higher, moving into the near future. Papa Vlad, you're in ICT's private community. No, I am not. I am a YouTube student, proudly. So I do have time for a couple more questions. Let me see if there's any members here, and then I'll touch on a few other ones if I do have the time. So Jay, expect, shout out to Jay, new member. Welcome to the Adora community, my man. So Jay, expect run up to that breaker inside the bearish fair value gap. ES hourly. Yeah, let me take a look at that. Earl, how do you become a member? You are. Just because you see the logo next to your name, I believe that is indicative that you are a member. So I believe you've already signed up, my man. Thank you very much for the support, brother. It means a lot. So let me touch on ES hourly. So I expect that run up into the breaker inside the bearish fair value gap on the ES hourly. Yes, so I will be looking for S&P to reprice into this inefficiency, and then how we trade there when we do will be helpful to me at the time. So I do prefer to see us reject within this fair value gap and resume lower for the equal lows in here, and then the higher time frame targets that I shared earlier in the session. So still looking for lower prices, and I am expecting the reaction to occur inside that hourly fair value gap. Gustavo, that is awesome, Dylan. Learning a lot from Honduras. Shout out to my man Gustavo. Thanks for joining us, brother. All right. Yes, Lotus, that is correct. Lotus, another donation. Greatly appreciated. Thank you very much. All right. So quite a few questions here. Piet, can you also review the Dow? So yeah, I'll touch on the Dow briefly. So I'm looking on lower prices for the Dow as I am the other indices. So seeing how we traded above this buy side here, rejecting that lower, trading through this down close candle, I prefer to see us violate that. And we are setting up beautiful trendline phantom here. So trendline liquidity. Retail logic, we look to target that, flip it on its head, and that's where we make our money. So because we're seeing trend line, we're already looking for lower prices. We are seeing bullish dollar. I will expect us to rip through this trend line liquidity aggressively and run for the sell side here. So my immediate target is the 32,900s. Reason being is because a lot of liquidity resides below this low, being it's the second touch of the trend line. So once retail traders are looking to buy this trend line here, they will put their stops here. So that's advantageous to us as smart money traders because we're going to look to attack that logic. So I will be looking for lower prices on Dow. Looking at the daily chart, man, this thing is extremely weak. So that SMT we saw with S&P and NASDAQ selling off, rotating lower. So looking at this inversion fair value gap in here, I did like to see how we closed below that and traded up into this up close candle. So I do want to see us reject from here and trade into the equal lows here and then into the 32,900s. So that's what I'll be looking for in the Dow here moving forward. Roshan, can you please do the GER30? It's been a little while since I looked at the German indices. Let's take a look at it. What's the futures contract for German 30? I'll look at the CFD right now, but I prefer to look at. All right. So let's go to the weekly chart. So looking for lower prices on the German 30. We've just taken out external range liquidity here, consolidation. This looks like a bull flag to me in a deep premium. So again, as I said, we look for that retail logic, and then we look to turn it upside down on its head. So I am seeing how this is a bull flag in a premium after taking buy side. So given that we are seeing a risk off scenario, that is not just limited to US stock indices. You will see pressure in the European stock market, German stock market, and all the risk assets that are traded. So looking at German 30, I will be looking at lower prices. We are trading within this breaker, high, higher high, hitting this breaker here, rejecting, and I do want to see that continue moving forward. We now have relative equal lows. So I'll look for an expansion through that into this down close candle's mean threshold. And then how we trade there will be influential moving forward. Hamza, where do I go to deeply understand these terminologies besides ICT videos? Do you have a course that covers these? So ICT would be the best place to learn the terminology. I personally do not have a course. I do have a plethora of videos here on the YouTube channel that would be a good start. But if you are looking for further education, that is something I will be offering into the late months of this year, November, December time. So I'm just going to go ahead and cover this here. I was getting quite a few questions with regard to when I will be starting my private training programs again, and I will be looking to do that in November, December. So exciting news, our website is in the works, so we are getting that finalized, and then we'll have our website out where then you guys can schedule consultations to speak with us here at Adora Trading and then see if our education and our private trainings would be a good fit for you guys. So we are making progress on that, and I will update you guys as we continue moving forward. Mistre, what's your approach in passing prop challenges, and suggest us from your experience on how to do it? So that's a good idea for a YouTube video. I'm thinking I will be doing a YouTube video. I recently just finished 2 six-figure accounts with a company I'm not going to discuss now, waiting for a little affiliation, and then they'll get the publicity after that. But so I will be making a video. I'm planning on doing so with regard to how I personally pass prop firm challenges, how I manage risk, what trade setups I'm looking for, and all the details with regard to that. So be on the lookout for that, Solomon. Rich, did I miss ES? Yes, you did, but the recordings will be uploaded, so be able to take a look at that at your own leisure. Nakeem D, welcome to the Adora community. Thanks for joining us. Jay, so for a rally up or down, price doesn't come down or go up for the first PD array, even if it is discount premium of the OT. So I'm looking for PD arrays within the context of premium to discount. So just looking at that example here briefly on S&P, looking at the hourly chart. So the reason I'm specifically looking at this fair value gap in here and not this one, for example, is because this one's in a premium of the short-term dealing range that we've created. So looking at this high to this low, the first premium array is this hourly fair value gap. So that is why this is my point of interest going into this week. So hopefully that covers your question. And then optimal trade entry is just a further confluence. So looking at this here, what would optimal trade entry look like? So it would be a retracement into this fair value gap. So optimal trade entry is just another confluence. If you understand drawn liquidity, time, and price, the PD array matrix, you don't really need optimal trade entry as much, but it is definitely a solid confluence if it does align with key PD arrays. So Cedric, when you're bullish dollar, I am too. It's hard to be bullish on commodities. So on US oil, wrong thing. So that is a good question, yes. But even with a bullish dollar, we can still see higher commodities. So mega trades typically form when all these things come into alignment. So for example, when dollar is weak, it is then really easy to see the commodity markets rally. But just looking at the aggregate commodities, for example, corn, let's look at this on a daily chart. So corn's been weak, wheat has been weak. Why? Because we've been seeing a bullish dollar. There's a lot of fundamental factors that are driving crude oil higher, a lot of which I probably can't talk about. YouTube would probably put me in timeout, so can't get too much into that, but I am looking for higher crude oil based off a lot of geopolitical events, fundamental analysis, but also, which is king, in my opinion, is technical analysis. So the technicals are screaming higher crude oil, so I will continue trading it as such. Yeah, Jay. So I hope that covered your question, my man. Sigma just bought a 10K my Forex funds right now. Wish me good luck. Best of luck, my man. All right, so let me look, see if there's any more member questions. How long did it take for you to find consistency or for it to finally click? So for myself, it was 1 year in. 1 year of properly studying, backtesting, journaling, and doing all the right things, which is the proper progression, backtesting, live tape reading, demo trading, and then eventually getting into live funds. And that is about a year process. After putting in all that work, do I regret it to be at the point where I'm at now? Absolutely not. And neither will any of you. Once you decide to put in the work, apply yourself properly. Once you start seeing the fruits of your labor, you get the freedom that comes with this business. Nothing's better than it. So that's my take on that. All right. Cedric, hopefully that covered your question, my man. All right, guys. So I do not believe we have any more member questions. So let me take a look at. Someone's asking me to take a look at gold. Yeah, let's go ahead and take a look at gold briefly. So I am bearish on gold. Let's look at USD. Let's look at forex.com. So I'm looking for lower prices on gold. So a few months back, I was monitoring this balanced price range here, extending that through. We found support. And then I said that if we were to remain bullish on gold, we would remain below this above this balanced price range and find support. We did, and then the market traded through it decisively. So what I will be monitoring on gold moving forward is seeing how dollar trades. So for gold traders, you definitely want to be doing intermarket analysis, understanding interest rates, dollar, because that is significantly going to impact the price of gold. So looking at gold here on a weekly chart, we have this weekly fair value gap in here and up close candles. So if we are going to continue lower on gold, which is what I'm favoring based off bullish dollar, I do want to see a reaction from this premium fair value gap, and how we trade there will be influential. If we close above it, my attention goes to this fair value gap and then how we trade there. But just for right now, I am looking for lower prices on gold unless we get above this fair value gap on a closing basis. Looking at the daily chart, significant run lower, several days of consecutive bearish order flow. So it is logical to expect a retracement. So looking at this here, we took out this low, pulled back into the range. So I do not really have a clear read on gold right now. It is a pretty sloppy market. It'll give in the consolidations a lot of time. But just looking at this here, I do think longer term, we do have unfinished business above all these equal highs. And we are trading within this monthly down close candle. So failure to accelerate through this monthly bullish order block will make me bullish. However, if we begin to accelerate through it, my attention will go to the sell side and the fair value gap in there. So back to the daily chart, retracement is to be expected, not problematic after taking out sell side. So how we trade inside this breaker, through the breaker, last line in the sand for me being bearish would be this up close candle, which would be our bearish order block. So if we do trade there, I would want to see a rejection. Through that, we are likely going to see these equal highs here cleared out on gold. Cedric, yes, thanks a lot. Happy to help, my man. Shout out to Denisha. Don't forget to give this stream a like. Much appreciated. All right, so I believe I covered all the member questions. So thank you all for joining us today. Productive session as usual. And thank you for the patience throughout the technical difficulties. And then as always, I will update you guys a bit through the Telegram. And then I am looking forward to being back into the full swing of things going into September, which is content daily, analysis daily. And we will be in the Telegram group doing that moving into this coming month. So with that, I'm excited for the fall months coming up. Lots of opportunity ahead, and we will be all taking advantage of it. So with that, everyone, hope you guys have a great rest of your weekend. Good luck and good trading.